Hey guys, Brian Stevens.
And I'm Frank Gray.
And this is a National Real Estate Show, and we are going back retro to what we used to do, and we're going to call this one Hokey Thursday. So, we had a conversation with a wholesale account rep a couple of days ago, and we had a chance to look at a rate sheet, and frankly, it blew us out of our seat.
Yeah.
Because when we got into the business, we were unabashed mortgage brokers. Remember
Right,
that?
we love brokering. We were all about the brokerage.
We did, but in 2008, 9, and 10, there was a transition from the brokers who went to the regional banks, and they got their different lines, and everybody migrated in that area because there was a certain umbrella that you were underneath that felt comfortable, right?
Yeah, amongst other things, compliance-wise and things like that. But there was a huge push to go to the banking side.
Absolutely, and that's where we find ourselves right now. But I always remember people talking about there's no cheaper way to bring a loan to market than through a brokerage channel because you don't have all the additional costs associated with it.
Okay.
Costs right now that are higher now than they've ever been.
True.
So I've had a chance to speak with a number of different loan officers who are individual mortgage brokers working out of their house.
Again, back to the old way.
Right out of their house. So they can set their bucket for different wholesalers that they're working with.
Interesting.
And looking at this rate sheet, I want to ask you why this isn't a better option to go. And it may be it's not, but I want you to look at this rate sheet. So yesterday's FHA rate sheet with one individual wholesaler, which by the way, they're all going to look like this. Check this out. At a rate of 3% on a 30-year fixed rate loan on an FHA deal with a 45-day lock, it's paying back in rebate 1.819.
Wow.
3 1/4 is paying back 3.859.
Wow.
3 1/2 is paying back a whopping 4.765.
Holy crap.
And by the way, 3.875, which is the highest the rate sheet will go, is paying back 5.360. And if you have a loan amount over $200,000, you get a half better in pricing. And if your credit score is over 720, you get a quarter. So you stand the chance to add 3/4 to this, which is going to push the entire rebate over 6%.
Holy mackerel.
So imagine if you're a loan officer right now, and you're working, trying to earn business away from your competition, and you're an individual mortgage broker. And let's say that you're making, I don't know what your bucket is. By the way, it could change from wholesaler to wholesaler, but let's say it's 3%, okay? You can offer 3% to your clients, or excuse me, you get 3% rebate, that's your commission to your clients with no junk fees, right? You can offer a 3 1/4% interest rate, and you can apply at least 0.859 back to pay their closing costs down, and if their loan amount's over $200,000, you get to add another half to that. So you're looking at rebating back without your junk fees, okay, so you can just wipe those out, an additional point. So you're paying $2,500 in closing costs, offering a 3 1/4 interest rate on an FHA deal.
And making 3 points yourself.
And making 3 points. You can actually offer a 3% interest rate, okay? You could charge a point up front, or excuse me, you could charge your 2 points up front, or no, 1 point up front, and you're still making your 3%. Would that not be a better option for you?
It's going to come down to the individual because a lot of people are going to look at, well, maybe so, but with the bank, I get these benefits, I get this branding.
What benefits?
Well, there might be medical benefits, there might be health benefits, that type of thing. There might be 401ks, those types of things that might sway someone to forego this for that. But I hear what you're saying.
Okay, all right. Well, let's address that.
Yeah.
So let's say you get health benefits. I personally have a family of 5. We're self-employed. I'm personally paying $1,700 a month in health coverage.
Right.
That's what I pay personally.
Right.
Now, if I closed one deal a month and I'm making 3 points on a $200,000 deal,
Right.
I'm making $6,000 that I don't need to split with anybody because I'm working for myself. If I close one deal a month, let's chop $2,000 off the top of that for my health care.
Yeah.
I'm still making $4,000. If I close 2 deals per month, I'm making $10,000
You're
a
ahead of
month.
the game.
Yeah, I'm making $125,000.
I
So
think-
wipe that one away.
Okay, so the other one would be compliance. Everybody worries about compliance. I'm an individual guy working out of my home, or maybe I got a little tiny office I'm not paying much rent for, but I'm worried about the CFPB coming down and just basically erasing me off of the face of the planet somehow. I mean, because I'm not being compliant somehow, maybe I don't have my act together compliance.
All right, a couple ways on to address this. If everybody did this, it's kind of catching ants one at a time. How many people can the CFPB actually go after? Second of all, you're making the assumption that you cannot be compliant when you have people like Bill Kidwell, who offers a package to work with you on your compliance, which is turnkey, for as little as I think it's $400 or $500 a month. So you can absolutely address your compliance. And here's the deal, guys. Right now as a loan officer, you look at making more money, earning more money in volume. So you're going to close 6 deals a month, 10 deals a month. Well, what if you only had to close 2 deals a month? Could you not close 2 deals rather than 10 deals a month, earn the same amount of money, but give that additional attention to those files so you know that they're closing absolutely perfectly? Would that not be a better way to go?
I guess so. I mean, I think you're probably right, and I think that a lot of people are certainly considering doing this and going this direction because we're seeing more and more of the little individual mom and pop broker shops pop up. We got the guy in our other office over there, Greg.
Right.
Remember, he went from the big bank down to his own deal. He just went down to his own deal, and we just saw that happen. I think more and more people are going that way. I think what might stop a lot of people is just the fear of doing it on their own, and also you got to get that broker's license too. So I mean, you got to go through all that whole process as well.
That's what's going to scare people off.
Yeah.
It's the whole idea of spread your wings and jumping from the nest. That's
Right.
going to scare people off.
Right.
But I want you to understand this. If you chose to work for yourself as an individual loan officer broker and you're going to deal with these wholesale companies, I want you to understand this. At 3% on a Govy deal, on an FHA deal, it's paying back almost to possibly more than 2%. Imagine walking into a real estate office and saying, hey, I can close your FHA deals at 3%. I can beat everybody in my community. I don't have junk fees, and I can also offer rebate at that price. Do you think you'd be able to pick up 2 deals?
You might be able to. I'd say you're probably right.
And you walk your ass from one office to the next office to the next office. You'd be able to drag 2 deals to the table every single month. And because you could give those absolutely perfect detail and attention and communication with your real estate agents, you would be guaranteed to get those deals.
Well, there's a lot of resources out there for the independent mortgage broker. One of those would be Remen. We have them on our show, Remen Wholesale. They're offering the flyers. You can click this banner over on your right. You can get these flyers that they provide for you. So you've got lots of resources. Bill Kidwell, like you just said, I mean, he's going to make sure just for a small fee, you're going to have your compliance basically covered. Turnkey box, right? Just got all your compliance covered. There's other little things you got to look at. Hey, copy machines if you need them. Maintenance on this and that and the other thing. But we are seeing a whole lot more people go to the broker side right now. So I guess our question for you guys is let's have a conversation about it down below. What are your thoughts on it? What do you like, about the banking side that you're in right now? Why do you stick around? Why don't you do that? And if you've done this, how you doing right now? How's that working out for you? That type of thing. Would that be fair?
Absolutely. But by the way, ask yourself, what's the cost of compliance? What is the cost of compliance working at your bank? 3.25% is paying 4 back wholesale. What is the cost of compliance when 3.25% is paying 4 back on an FHA deal? And also, this really speaks volumes about the bond market. That this is a great place for people to invest their money.
Right.
And the return on their investment is not very good. So right now, writing loans as a mortgage broker, an individual working for yourself, boy, there is so much money in this thing, it's almost unfathomable. And for me, and I know it's the same for you, this is the craziest rate sheet I have ever seen in my life.
It's been a long time, but yeah, I agree.
Absolutely crazy.
It's been a while.
Anyways, let us know what you guys think, like Frank said, in the comments down below. Do you think it would be a good idea to jump ship, work for yourself, out of your house, scale down your business where you're not constantly chasing the next deal? You really give that concierge service to a couple of people per month. Or again, buy a bunch of marketing stuff and work yourself in the ground.
Different strokes, man. But we'd really love to see the commentary down below because I think it'll stir up a good conversation.
3.25%, 4 back.
It's craziness.
Let us know, guys.
You guys have a great day. Forward, share, and subscribe. Those comments are important today. Catch you later here from Nashville State Post.
Bye.
Bye.